Let me tell you something most investors never think about. Liquidity feels safe. It feels responsible. It feels smart. But for the long-term investors, I'm talking about the wealthiest investors, liquidity is often the most expensive feature in their portfolio. And the wealthy know this. Hey guys, if we haven't met yet, I'm Dr. Johnny Walker, aka Jonathan Withanacci. I'm a part-time endodontist and real estate fund manager. And I help successful business owners and dentists invest outside of the traditional Wall Street products so that they can buy back their time and make dentistry optional. Now, what does liquidity mean? Liquidity simply means this. It's how quickly can you turn an investment into cash. Stocks, very liquid. ETFs, very liquid. Private investments like syndicated real estate, not so much. Not liquid at all. It's an illiquid investment, to be honest. And most people assume, hey, the more liquidity you have, the less risk. That assumption is wrong. The more liquid an investment is, the more it's priced every second of the day, right? It's priced and repriced. The more emotional decisions you're tempted to make, the more you're exposed to volatility you can't control. If you're one of those disciplined people and have the stomach for all the ups and downs, hey, kudos to you. But for a lot of people, seeing their wealth, their portfolio drop, stirs up a lot of negative emotion. Instagram says, hey, the sky is falling, I need to pull out. So there's a lot more emotion involved, and emotion can often lead to rash decisions that may not be the best long-term decisions. So liquidity can actually hurt in these type of situations. Now let's look at why the really wealthy, I'm talking about ultra wealthy, have given up liquidity. Ultra wealthy investors, they're willingly lock up capital for 5 years, 7 years, sometimes even 10 plus years. And it's not because they're reckless. It's because they understand something that most people do not. Illiquidity is often where the premium lives, right? That's where the profits, outsized profits live. That premium shows up as number one, higher expected returns. Number two, more predictable cash flow. Number three, less forced decision making, right? It's a long-term landscape. Number four, better tax efficiency, right? All significant factors. Here is the real cost of liquidity. You sell when markets scare you, often the bottom. You buy when markets excite you, often the top of the market. And you pay taxes every time you move money out of those accounts. You accept market returns instead of negotiated returns. Now, don't get me wrong, liquidity gives you options, but most investors use these options against themselves. Now, dentists are especially vulnerable to this. Why? Well, high income. We have very limited extra time, constant stress running a practice, being a dentist, working with patients, dealing with staff. Market swings feel personal. So liquidity becomes a crutch. I want access to my money just in case. But that just in case part often costs millions of dollars over the span of a career. So let me be very clear. Liquidity is not bad. And you need liquidity. And you should have at least 3 to 6 months of reserve liquidity where you can have money for emergencies. But too much liquidity in a long-term portfolio is like putting a day trader's tool set into a retirement strategy. They just don't fit together. They're in different mindset. The wealthy doesn't eliminate liquidity. I cannot stress that enough. I'm not against liquidity, but you have to right size it. Not small size it, not super size it. But just like Goldilocks likes her porridge, you gotta get it just right. Now, let's compare that to private investing, right? Private investments do something powerful. They slow you down, they force discipline, they reduce noise, they reduce volatility, and they align decisions with long-term outcomes, right? If you wanna be a successful investor and build incredible wealth, you have to become a long-term investor. I know it sounds boring, but that's not a bug. That's the feature. All right, hope you guys got a lot of value from that video. If you did, please smash the like button. Please subscribe. Share this with other like-minded people. And if you're realizing your portfolio is too liquidity and too stock market dependent, and you're just not being intentional enough and would like to do that at a high level, this is exactly why I've built the Walk of Wealth Mastermind community group. It is a small group of curated, high-level dentists and entrepreneurs that focus on building wealth, building strategy, building cash flows, reducing tax liabilities by focusing on investments in private investments like commercial real estate, oil and gas, debt funds, triple net real estate, etc. In our group, we talk about being a smart, intentional investor with smart allocation in a very, very strategic, prescribed way. There's not a lot of guesswork. And And we think about long-term thinking outside of Wall Street. This helps you to create frameworks and strategies for you to invest and put yourself and your family in the best position possible. Our mastermind group has no pressure at all. It's about information. It's about connection with other like-minded people and sharing resources and strategies. An absolute game changer if you are looking to build significant wealth. I'll put a link for the video that describes the mastermind group in much more detail below. This group is not for everyone. I'll let you know that right from the jump, but it is for the serious dentist that is looking to decrease timelines and increase the predictability of success. Now I'm going to end this video by saying liquidity feels safe, but safety and progress are not the same thing. Understanding that difference is where real wealth starts.